All right, well, markets are reacting today to Greece as the country attempts to solve its debt problems again. But this next investor says Greece is pretty much irrelevant.
Marc Faber is the editor of the famous Gloom, Boom, and Doom report. We are so thrilled, Marc, to have you
it's my pleasure.
On set with us this afternoon. So first, your outlook on Greece. Why is this not a threat in your view?
Well, I think it's a symptom of a wider problem that we have over-indebted governments in the Western world and in Japan. And this is just a small play and a small appetizer to much larger problems and a much larger crisis.
So why do we see this reaction in the banking stocks even today?
Well, basically what has happened, the market peaked out last May in 2011, and then it dropped to 1,074 on October 4th on the S&P, and now we're up 25%. So the market is very overbought right now, and any excuse for profit-taking is now being taken. And I think February is traditionally a weak seasonal month, so we'll go down first for a while.
So even on a day when the market is down almost triple digits, you wouldn't go in and buy some bargains?
I would just wait a little bit, because take, for instance, the home builders and the banks. The home builders, in some cases, are up 100% from the lows last October, November. The banks are up 60–70% from the December lows. I would just wait here a little bit, because we don't know how bad the correction will look like. Could be 100 points on the S&P, could be 200 points.
So even as you see those dividend checks coming in, instead of paying this, because I know you like to use, instead of cashing out, you like to use the dividends to buy stocks, but you'd leave the cash, let the cash pile up a little bit first.
Well, I bought some shares in November, December of last year, and I'm not going to sell them because they are high dividend shares in Asia, and I quite like the Asian market.
What are they specifically? Can you tell us?
Well, Singapore REITs and real estate related companies in Thailand, because they knocked off the industrial park companies following the flooding of the some Thai industrial estates, and some shares in Hong Kong. And actually what is interesting in this rally, since early January, the emerging markets have done best. I mean, India is up 14% and the currency has strengthened, so you're up almost 20% in essentially a month's time. So all these markets have become very overbought.
So emerging markets are obviously a place you're bullish on. I know you're adding to your U.S. equities position, or you're building on that.
Not really. I like real estate in the U.S.
So nothing, you wouldn't go cyclical, you're staying defensive.
Yes, but I like real estate in the U.S. It's very inexpensive.
REITs, commercial?
No, just buy a house.
Really? Okay.
Yes.
to invest or to live in?
Yes, I was in Phoenix the other day, and then the taxi driver took me to the hotel, a nice hotel, Fairmont. And then he told me, you know, the person I drove just before you, I drove him to a 5-bedroom house, and he told me he just bought it for $120,000 US.
Wow.
Where in the world can you buy a 5-bedroom house for $120,000? I would buy it, live in 1 bedroom, and rent out 4 bedrooms to concubines.
Oh, jeez. What an idea that is. Mark never holds back.
So is the bottom in home prices then? Across the board, coast to coast, or is it still regional?
If you take a very bearish view of the world, then at least if you own your property, you still own it. If you pay for cash, and then you get the cash flow as I suggested. And if you are very bullish about the world, it means that the demand for real estate will go up. I was 3 days ago in Miami. 3 years ago, I counted 47 cranes building high-rise. This time around, I counted 1 crane destroying a building.
Wow, that's a good indicator.
You know, the market has cleared actually in Miami. A lot of money has come from Latin America, from Russia, because if you want to open a bank account somewhere, they ask so many questions. But as a foreigner, you can go and buy a condo.
By the way, are you shorting anything at all out there? Because some say that the Australian dollar is getting ready for a fallback.
Yes, I think so. I think, you know, when we talk about Greece, the major issue for the world's economy is China. And China has been slowing down. The industrial production is down, electricity consumption is down, exports were down, and cement production is down, steel production is down. So many indicators point to a meaningful slowdown in the economy.
And the Australian dollar depends on material sector.
The whole
to sell
world
to
depends
China.
on China because, you know, Mercedes and BMW, China is the largest market for Rolls-Royces, by the way.
China gets all its materials from Australia, so if China's not growing, Australia may fall.
Same for Brazil.
Yeah. Marc Faber, good to see you.
Well, nice to see you.
Thanks for the information about the concubines.
Yes,
very interesting.
Most important.
Most important.
Urgent matter.
Now I'm feeling uncomfortable.
Thanks a million.